Our top story this half an hour, U.S.-China trade. The two sides are set to resume high-level trade negotiations in Washington tomorrow. This as China reportedly says that it is ready to talk about a partial trade deal, and it is ready to increase U.S. agricultural product buying by $10 billion a year. The Chinese buyers bought more than 1.5 million metric tons of U.S. soybeans in the last week of September alone. Joining me right now is CNH Industrial CEO Hubertus Muhlhauser. And Hubertus, great to see you. Thank you so much for joining us.
Hey, Maria. Thanks for having me on the show.
This is really important because your machines harvest the soybeans that have been really at the center of so much of this trade debate and so much more. So tell us what you've been seeing from your standpoint.
Yeah, I mean, as you said, we're the second largest agricultural equipment manufacturer under the brands, U.S. brands of Case, IH, and New Holland. And actually, if that would become true, it would be a dream come true, because that's what farmers were waiting for, a trade deal with China, because they have suffered a lot because of the trade deal. So if we found a resolution right now and 10 billion a year purchases, that would be great. That's perfect news. It's very good news for U.S. farmers. And it's also very good news for us as an agricultural machinery manufacturer.
Now, I know that you're looking at agricultural machinery and you're looking at agricultural buying, but this trade deal is even about more than that, according to the U.S., and that is about the theft of intellectual property and the forced transfer of technology, even fentanyl coming into this country. So, yes, that's a great part of the story if they're buying more agricultural products, but can they get it across the finish line given the other big ticket items?
Well, that I don't know.
Yeah,
I think a comprehensive conclusion over the Chinese issues is probably not to be found within the next days. I think that's more a months-long negotiation process. But perhaps we'd find a solution that at least bits and pieces get done. And I think if we get the buying of agricultural products done first, I think that'll be good. I don't know whether we're going to find a comprehensive agreement in the next days, but I would hope that the U.S. administration takes this invitation and at least closes a partial deal on the agricultural side, because, again, those farmers have suffered right now. And the ag machinery and the ag markets are in the trough in the U.S. for many years now. So finally to get that stimulus will be very, very positive. So I'm hopeful that something, at least something, gets done on the partial side, on the agricultural side.
At your Investor Day in September, you talked about increasing CapEx, capital expenditures, and of course, this ambitious goal to spin out the truck and engine business. Let me ask you about the CapEx increase, because this is something we're all worried about. The fact that over the last couple of months we've seen capital expenditures go down for largely corporate America. What are your plans?
Yeah, we want to see this current turbulences and uncertainties through. The agricultural machinery space is a very, very innovation-driven space. We are one of the leaders, or not the leader, in precision agriculture, precision farming machinery. So we really see that with our investments, we're creating productivity increases with our end customer. That's the reason why we want to invest into our farm equipment and also our construction equipment, being also one of a very large construction equipment machinery manufacturer. And the plan basically foresees in ag a growth of 5% CAGR, which sounds a lot over the next 5 years. But considering where ag has been in the last years, that it was really in the trough, we see we're going to have market help. And we basically believe that by investing 13 billion of innovation money in CapEx into our company, we will be able to gain market share from competitors. So we feel very confident about our growth story. And as you have said, next to the growth, we have also a margin journey. We do believe that we still have some gaps on the margin. So a 400 basis point margin journey is what we have put out there. And finally, we want to unlock value by splitting the company up, because here in the U.S., we're a very, very large company in the off-highway side, ag and CE, and globally as well. But we also have an on-highway business, and we want to unlock the value of the on-highway business by spinning it off separately to the stock markets.
This is a really important story, because you are monetizing this real growth engine within the company. But, I don't want to underestimate a 70% increase in margin in terms of this step up in R&D and CapEx. Tell us what you're seeing in terms of the demand for things like your trucks and buses and construction equipment right now.
Well, on the agricultural side, we're seeing the demand for our precision agricultural solution, automated machinery. There's a lot of automation going on in the ag space, and we're seeing that this creates productivity gains, and farmers are buying that, actually. So they're buying that already right now, and we're gaining a lot of share this year in combines alone, because we basically brought a very, very highly automated combine harvesters. And on the on-highway side, on the truck side, I think we're one of the leaders in alternative propulsion. So we're going into LNG trucks, liquefied natural gas trucks and also fuel cell trucks. And we just became the lead investor into Nikola fuel cell trucks, which is the U.S. leader in fuel cell trucks, a true disruptor of the industry. So in on and off highway, you both have growth opportunities with us, and again, customers are paying for innovation.
And it certainly differentiates you in terms of the growth strategy for the next 10 years. But within that time frame, people are also worried about Brexit. I want to ask you about this because you've got a large factory in the UK, and the trade impact in terms of Brexit. Will it happen? Won't it happen? How are you preparing for that?
Can you prepare for that? I think nobody really knows where Brexit is going right now. I'm an optimist, eternal optimist on that one. I think that the Brits in the end will stay. How this is going to come about, we will see. Most likely they're going to have a re-election. But again, I mean, cards are changing every day. It's very difficult to predict what's happening there. Yeah. But we're preparing that. I mean, I said yesterday, we're preparing for the worst and we hope for the best. So we are a large employer in the UK, and we hope that the right decision is taken and the UK stays.
If they leave with no deal, would that be a disaster? A no-deal Brexit where they don't have trade deals in place?
It would be very bad for the UK. It would also be very bad for Europe, and it also would be bad for the US, because in the end, I mean, we're good friends. We're large trading partners, Europe and the US, and the US has an interest in a healthy and strong Europe.
Yeah, you look at Caterpillar, your competitor, feeling the effects of the trade tensions, headed for a one-month low, concerns of slowing economy. What's your take on the broad backdrop in terms of the economy? We know China is slowing as a result of all of this.
Well, I mean, there is volatility and uncertainty out there, and as we are active in different industry segments, some segments are going to go down for sure. But again, a big portion of our business is agricultural, and there we're actually optimistic. So we're cautiously optimistic for 2020, despite all the trade uncertainties, because we see light at the end of the tunnel, so to say.
And go ahead.
And I think one thing is also important. I mean, we talk a lot about China, but don't forget USMCA, you know, the NAFTA 2.0 agreement. We also have to get that done, and I think that also needs to be, you know, on the top of the mind of current U.S. administration.
How would that impact CNH?
A lot. I mean, most of our large facilities in the U.S. have their key trading partners in Canada and Mexico, and I think there is a lot going on. Also for agricultural, it's very, very important that we get USMCA 2.0 done, or USMCA done, which is a better agreement than NAFTA right now. So I really would hope there would be bipartisan improvement and an agreement on that one. And I think what is also positive is that we finally ratified now the deal with Japan. I mean, that's going to be some you know, demand for U.S. farmers. So I see also some positive. It's not all bleak, okay?
Yeah, and I like the fact that you're not only looking at the growth story and investing in that growth story, but at the same time you're trying to take costs down. And that's certainly going to help margins going forward.
You have to, and you basically have to shift competency. Yeah. So I think growth is also going to come by being a frugal and mindful spender.
Real quick, when do you expect the spin-off of the truck and engine business? What's the timing on that?
We will prepare now in the next 12, 15 months. So we want to be live, so to say, January 1st of 2021 latest. So we're going to take 12, 15 months to prepare for that spin.
Okay, we will leave it there. It is great to have you.
Perfect. Thank you very much.
Thank you so much. Hubertus Muhlhauser joining us, the CEO of CNH Industrial.